Hey everyone, I'm currently on vacation right now. I'm in Prague and had a little time, so I was gonna shoot one of the videos that I'm kind of behind on that I said I would get to, and don't have my notes or the computer in front of me, so I'm just gonna go from memory. We're gonna go over Nintendo, which is a mid-sized position I have, and the price right now it's about 13.50 a share. The symbol is NTDOY, and this isn't a recommendation to buy or sell. I'm not telling you what to invest in. I'm just going over how I invest in the process because it's helpful to me, and it might be helpful to you in developing your own investing style. So anyway, Nintendo you probably know as the video game company, and it's a very old company. People don't realize that, but it's over 100 years old. They started out making playing cards in Japan, and they were into different games, and then eventually got into video games, and they were always pretty smart about it. Like they wouldn't be at the bleeding edge of technology and games. They would always do the lower end, cheaper games, which were low risk and they made a lot of money on. And they're still around today, and the Switch is pretty popular. They had other gaming systems that were popular at different times, like the Wii, Game Boy, things like that. But the valuation and the pipeline and catalyst are really interesting for Nintendo. So anyway, Nintendo's been around for over 100 years, and usually when you see very old companies, especially old Japanese companies, they're run very conservatively, and that's the case with Nintendo as well. So the company itself, I think it's like 63 billion market cap US, and it's got like 48 billion in cash. So that's about no debt and about 15 billion in cash, and 63 billion. So somewhere between 15 and 20% of the market cap is cash. And it's trading for about 20 times earnings, a little under 20 times earnings. And then 20 times earnings isn't that much to pay for a great company like Nintendo that has no debt. But, then if you back out the cash and figure that, somewhere between 15 and 20% of it is cash, then you're paying between 16 and yeah, 16 about 16 times earnings if you back out the cash. So then it looks really interesting because if you compare it to um, other things that are trading in the market, and I think the S&P 500, which is driven by the Magnificent Seven, the high flyers like Nvidia and Google and Apple. On average, the S&P 500, when you're buying the index, is about 23 times earnings. So if you can get this for 16, and it's a great company that has some growth ahead of it, I think that's a pretty good uh, trade-off. So what makes it so interesting? So people know the video game system that they have, and every few years they come out with a new system, and the current one is the Switch, and it's been uh, several years since they've updated the Switch, and I think that's part of the reason that people are sort of shying away from it because generally you release a new gaming system and sales go up, 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 and then they kind of peak, and then they go down, 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 and then you come out with a new gaming system. So they haven't come out with one in a while, and Nintendo kept denying that they were working on it. But eventually, through leaks and other documents and things like that, people um, sort of fitted together that they were working on one, and Nintendo kept denying it. And actually, they came out with a press release saying, yes, it's on the way, but it's going to be delayed. It won't be till 2025 instead of 2024 when they were originally thinking of releasing it. And when that happened, the stock price took a hit. But in my mind, that was good news because um, it's coming out later than people thought, but they confirmed that they are working on it. It's on the way, and that it's coming out a little later because they want to get it perfect, which is great because you don't want to release something mediocre and then have it affect your sales. I think it's better to wait and release something better because then people like it more. And that was kind of the strategy with Google. Google didn't do a lot of advertising in the early days, and they thought eventually everyone will use Google, and that sounds kind of like a very bold prediction, but The CEO of Google said, it doesn't really matter to us when people try Google because we're always working on it and making it better. So the people who haven't yet tried it, by the time they get around to trying it, they'll have a better experience. And so he wasn't that concerned about it. And I think with Nintendo delaying the game a little bit and saying, we want to make it as good as possible and a little bit better, that's a great thing. So uh, the Switch is coming out next year, and that should help sales of not only the Switch but the games that Nintendo makes. And currently, they have something called Switch Online, which is kind of like the cloud that you have your game stored in the cloud. So if you buy a new system or switch to a different system, all your games are on there, and it's backwards and forwards compatible. If you lose your DVD, you still got your games because they're stored virtually, and there's a monthly charge for this. And what they've discovered is that when people use the Switch Online system, it's great for Nintendo because people that sign up for Switch Online tend to buy more games and spend more money. So that's great for Nintendo. And the number of users that are using Switch Online is growing. And also, when you have everything loaded on the cloud instead of on physical discs or something, you can't share with your friends, so everyone has to buy their own, which is also great for Nintendo. And as I said, when the new Switch comes out, that should help with Switch Online. And you'll notice with businesses that have uh, things like cloud service or other monthly subscription recurring revenue software models, they call it SaaS, SaaS, software as a service. And those get really high multiples in the market. They usually don't trade at less than 20 or less than 16 times earnings when you take out the cash. So I think this is one of the ways that Nintendo is very valuable. It's not being perceived that way by the market. And also on some of the parts, and when you add it up, all the some of the parts, and then you think about the catalysts and growth drivers that are coming down the pike, it's not being priced in at all. So you probably have seen Super Mario Brothers movie. If not the movie, you've seen it advertised, and that does great for the video games that Nintendo sells. People love the movie, they buy more of the game. People love playing the game, they go watch the movie. And Nintendo also owns part of Pokemon, which they have games for, and movies and TV shows and things like that. How much Pokemon they own, it's kind of tricky, but they own a little more than a third. So there's three entities that own all of Pokemon. One is Nintendo, one is another company, and another is a software company, and they each own a third. But Nintendo owns also part of the software company that owns a third of Pokemon, and I don't remember how much. So they own more than a third of Pokemon, but I'm not really going to add it up in my head how much. So that's another valuable piece of IP, intellectual property. And the Nintendo Mario Brothers movie did really well, and they're coming out with a sequel to that in 2026. And hopefully that will help software sales and theme park sales, which are coming soon. So it's kind of that flywheel. And also Legend of Zelda, also owned by Nintendo. It's very popular, and there's a live action movie coming out. So hopefully that will help with game sales and things like that. And Legend of Zelda, it's a unique property, and someone had told me, and I think this is pretty accurate, that lots of people like Mario Brothers, and a lot fewer people like Legend of Zelda. But the ones that do have Legend of Zelda tattoos and name their kid Zelda. Mark Robin Williams named his daughter Zelda after the game. So anyway, that's just some of Nintendo and what they own and the background. There's also some coming growth drivers besides the new Nintendo Switch that I mentioned, which should help the Switch Online sales, and not only earnings, but if people come to view Nintendo as a software as a service company, a SaaS company, the multiple that they get would be more than 16. So if it was valued like other SaaS companies, I would say it would be worth twice as much as it is now. You've got the new movies coming out that should help also. And they also have an interesting deal for theme parks. So I believe it's Universal Studios built the first Nintendo World, and it was very popular. And they want to build several more, I think 5 more in different parts of the world. And it's a unique value proposition for Nintendo because this other company is going to put up all the costs to build the theme parks, buy the land, build the rides, build the exhibits, and Nintendo is going to get a piece of the gate. I want to say it's 6%. Don't quote me on that, but so it's almost like you're franchising a restaurant, and somebody else puts up all the money, and then you just get a piece of the monthly revenue. So if the theme park ends up being really well for the company that's building it, I believe it's Universal Studio, they'll build more and Nintendo will get more money. Even if it doesn't do as well for Universal Studios and they lose money on it, Nintendo is still getting 6% of the gate. So they'll make money whether the theme parks are a huge success or not. But whether it's a huge success or not will depend how much money Nintendo gets because, as I said, they're getting 6% of the gate, and they're not putting any money up to build the theme parks. So it's kind of a win-win for Nintendo. Heads I win, tails I win a little less. And and if you think about it, it's kind of like Disney World, where Disney has these movies that kids love, like Star Wars or Little Princess, you know, and because they love these movies, they go to the theme parks and buy the toys or whatever. So Nintendo has that kind of quality, except it doesn't have the baggage that Disney has, where they've been getting into pissing matches with politicians about woke issues and stuff like that, and it's really affected the stock price. Nintendo is a family-friendly company. They sell kids' toys, kids' games. They don't do first-person shooter video games, and they are getting in this theme park business, which they're going to make money on, and somebody else is paying all the cost and giving part of the money to Nintendo. Nintendo could make more if they built the parks themselves and kept all the money, but Nintendo, as I said, it's a very conservatively run company. They've been around for over 100 years, and they're not looking to stick their neck out too far. So I think this is playing to their strengths, which is letting somebody else put up the money, and then they get the cash. So as I said, those theme parks have potential to be very profitable, and yes, and you sort of have this flywheel where you have this intellectual property of Nintendo and Super Mario and Zelda, and then you make movies out of them, you make video games. People watch the movies, they buy the video games, they'll go to the theme park, and they sort of, all these three properties reinforce each other and make themselves better. And, so it's kind of a virtuous cycle there. Also pays I believe, like 2.5% dividend, so that's helpful. And in terms of their competitors, Comcast, I believe, owns Universal, so you've got that type of thing there. But you can't think of some IP that Comcast has that is comparable to Pokemon or Mario Brothers. And with Disney, you have these powerful IP like Star Wars and Little Mermaid and all these things, but they've sort of shot themselves in the foot by unnecessarily picking fights with politicians and getting involved in things where they have no business going. But Nintendo, you've got this very conservatively run Japanese company, no debt, lots of cash, and they have these catalysts that are coming down the pike within the next year or two. One is the release of the new Switch. Two is the growth of the Switch Online. Three is the theme parks, where somebody else is putting up the money and they're getting the revenue. And another thing to think about with the theme parks, they're only getting 6% of the gate, but if you go to Disney, a lot of people buy the Disney merch while they're there. And if you go to the theme park and you buy the Nintendo merch, be that Pokemon or be that Mario Brothers, at Nintendo World, whatever you're buying is merch that's licensed by Nintendo. So they're kind of double dipping on the theme park, and I think they're going to get a lot more than 6% of the gate. I think I talked about this in the St. Joe video, where you want to look for something that not just has one thing going for it, but that's got several things going for it, and there's sort of like a force multiplier that self-reinforces. And I think you have that here with Nintendo, and also at a reasonable price. And so I have a good size position here. I'm not buying more at these prices, but if it came down more, I would. And I think even at these prices, if it stays this price and doesn't go up, as you get closer and closer to the new Switch being released or those theme parks coming online, it might be a very attractive investment at those prices because if you still get this price a year or two from now when those catalysts start coming online, you're still going to get a great return without having to wait 2 years. But as for me, I started buying around 10 for this. It's at 13 now. It's doing fine, and I buy more at a lower price. But it's one thing buying it at 10 and then you're hoping it's going to be a double in 2 years or 3 years, and you know if you're buying at 13 or 13 and a half, it's a higher price. But if you only have to wait 6 months or a year for it to double, I think that looks like a better deal. And there's no guarantees. There's no guarantees that the theme parks will do well. There's no guarantees that people will love the Switch. They've had great successes with some of their consoles like the Switch, and but some of them didn't do well. I believe the Wii didn't do well. So there's no guarantee that the new gaming system will do well. There's no guarantee that the theme parks will do well. There's no guarantee that the um, Mario Brothers sequel or the Legend of Zelda movie will do well. But you've got a lot of ways to win, and Nintendo's been really good at executing uh, over uh, over a century, and they haven't done anything to make themselves in danger of going extinct. And I think if they have that in their DNA, it's a good bet for them. So it's still being run by the person who it's a little old Japanese guy, and he's the one who came up with the idea for Super Mario and a lot of these iconic video games, and he's still running the company. And with Japanese companies, you don't have the same issue that you do with a lot of U.S. companies where the stock is trading cheap, and then some corporate raider will buy up the shares and try to do something that boosts the stock price short term but doesn't help in the long term. So there are quite a few Japanese companies that are what Ben Graham would call net companies, where if you look at how much money they have, it's trading for least less than the market price, and you would think a corporate raider would come in and distribute all the cash, and everybody goes home happy. But the country of Japan is not as friendly to shareholders, minority shareholders, as they are in the U.S. or Canada or Great Britain. So that's unlikely to happen. But as I said, this is a company that's conservatively run, no debt, tons of cash, and they've got these multiple lottery tickets that could work out well for them. And so I'm happy to have a mid-sized position here and wait for those catalysts to play out. And if the price comes down, I would happily make this a large position. Or if the price stays where it is and more time goes by and we get closer to the catalysts without the price moving, I think I might be interested in buying more at those prices as well. But anyway, that's my idea. And if you have any comments, leave them below. If you think I'm wrong about this, go ahead and leave a comment and tell me why. So I believe the last video I did was on Coupang, which is like the uh, South Korean Amazon, and this is a Japanese company. I usually don't do uh, a lot of these overseas companies, but I do own a lot of Fairfax India. I may do a video on that. That's trading pretty reasonably now. And Fairfax Financial, it's like my fourth biggest position. I may do a video on that. And I think I promised FRPH, which is owns real estate and some quarries in Florida. I may do a video on that. And I also own, I've been buying Enphase, trading in and out of that, buying when it's in the low hundreds and selling when it goes to the hundreds and teens. So I may do a video on that and what I see about that company. But if there's any other ones that haven't done, and you're interested in, just leave a comment, and good luck out there.